Every week, we make choices that look small in the moment, but change the shape of our future. Welcome to Decode Advanced English on Wealth by Hana, where English meets finance, investing, and real-world thinking. This week, we've been exploring one powerful idea: opportunity cost, the hidden price of the road you don't take. In our weekday episodes, we followed stories about careers, evenings, spending, studies, and relationships. Today, we're going deeper. I'm joined by 4 of our resident experts: Alistair in stocks, Victoria in real estate, Liam in personal finance, and Sophie in banking, to ask a simple question. If every choice has a cost, how do we choose better? Liam, let's start with you. For people who didn't study economics, how would you describe opportunity cost in simple, real-life terms?
I'd say this. Opportunity cost is the value of the best thing you give up when you choose something else. It's not just the price you pay. It's the alternative benefit you lose. If you spend your entire evening scrolling, the opportunity cost is the skill you could have learned, or the rest you could have had. If you spend your bonus on a new gadget, the opportunity cost is the investment or debt reduction you chose not to do. The tricky part is that opportunity cost is almost always invisible. Nobody sends you a bill for the life you didn't build.
Alistair, how do stock investors think about opportunity cost?
In equities, opportunity cost is everywhere. When you buy one stock, you're automatically not buying something else. Maybe a broader index, maybe a safer asset. If you sit on cash because you're afraid of volatility, your opportunity cost might be years of market growth you never participate in. If you chase every hot tip, the opportunity cost might be the simplicity and stability of a disciplined long-term portfolio. Serious investors constantly ask, is this the best use of my capital compared to all other realistic options? That's opportunity cost thinking.
Victoria, what about real estate? Where do you see opportunity cost there? Property is full of trade-offs. Buying a home early can give emotional security, but the opportunity cost might be flexibility. You tie up capital and limit your ability to move or invest elsewhere. On the other hand, renting forever might keep you flexible, but cost you potential equity and protection against rising rents. Choosing a particular city or neighborhood also has an opportunity cost. You gain one lifestyle and price point, but you give up others. Every major property decision is a choice between different futures, not just different addresses.
Sophie, as someone from banking, you deal with people's cash and safety nets all the time. How do you see opportunity cost? I see it when people either hoard cash or take unnecessary risk. Keeping all your money in a low-yield account feels safe, but the opportunity cost is the lost purchasing power and potential returns over time. On the other side, putting all your savings into high-risk assets means the opportunity cost could be your ability to handle emergencies without panic. In banking, we talk about liquidity and security, but underneath those words is the same question. What am I giving up by choosing this level of risk or safety?
So if we connect this to week 1, the safe job versus startup was a career opportunity cost. The evenings were time opportunity cost. The bonus spending was money opportunity cost. The work versus study decision was an education opportunity cost. And social invitations were lifestyle opportunity costs. Liam, from a personal finance perspective, what's the common pattern behind all these different examples?
The pattern is this. People rarely stop to ask, what am I giving up? They see the job they take, the trip they book, the night out they attend. They don't see the skill they didn't build, the investment they didn't make, the relationship they didn't nurture. Opportunity cost is just a disciplined way of saying, if I say yes here, where am I saying no? Once you start thinking like that, you don't become rigid. You become intentional.
We've heard from experts. Now let's listen to how opportunity cost feels in real life. 2 different people, two different stories, both about the hidden price of their choices.
I used to say yes to every social event. Drinks, dinners, weekends away. I didn't want to miss out. I put everything on my credit card and told myself I'd figure it out later. Then one day, I realized I was saying no to things I cared about more. I couldn't afford a course I wanted, I was terrified of losing my job, and I felt stuck. My biggest opportunity cost wasn't money. It was the freedom I never gave myself, because I kept buying approval and distraction.
For me, it was the opposite. I said no to everything for years. No trips, no dinners out, no fun, just saving and working. I thought I was being smart. But the opportunity cost was connection and health. I was exhausted, isolated, and close to burnout. Now, I still think about opportunity cost, but I ask a different question. Is this experience worth more to me than the alternative use of this money or time? Sometimes the answer is yes, and I say yes without guilt. Sometimes the answer is no, and I say no without shame.
Before we close, let's decode some advanced English vocabulary from today's episode and from our This Week series. These words will help you talk about opportunity cost like a professional. Opportunity cost. The value of the best alternative you give up when you choose something else. Trade-off. A situation where you gain something but lose something else at the same time. Alternative. Another option you could choose instead. Short-term versus long-term. Short-term refers to the near future. Long-term refers to a much longer horizon, like years or decades. Sacrifice. Something valuable that you give up to get something else you value more. Payoff. The benefit or reward you receive from a decision or investment. Time value. The idea that when you use time or money matters because they can grow or lose value over time. Optionality. The ability to choose between different options in the future because you prepared well in the present. Today, we saw that opportunity cost is not just a theory for economists and investors. It lives in your job offers, your evenings, your spending, your studies, and your friendships. From Alistair's stocks, Victoria's real estate, Liam's personal finance, and Sophie's banking perspective, the message is the same. Whenever you say yes, you are saying no to something else. The question is whether that trade is conscious or accidental. If you want to revisit these ideas, go back to our This Week series episodes on the road not taken in your career, evenings that shape your future, spending versus investing, work now versus study now, and saying no to protect your future. You've been watching Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. Keep building your wealth mindset and your English, one lesson at a time. See you in the next episodes.